Tuesday, November 19th, market analysis. Good morning. Stan Ehrlich, 9:50 California time, about the middle of the trading day, traditional trading hours. We have a continued move down, although at the moment we're a little tiny bit higher in the day. But for the most part, we've made or attempted to make new highs, lows since the market was overbought about a week ago, and I started to get my correction I was expecting. On the E-mini, today we have an outside trading range, and at the moment, we are a tiny bit higher for the day. So at the moment, it's a bullish engulfing, but that may not last. This morning, we did get higher than the previous day's high, and then we nosedived to lower than the previous day's low, creating a bearish engulfing, but it didn't hold. Normally, these patterns are based upon daily action, meaning where did it close? And the closing price is the dominant deciding factor. If you have the higher high, lower low, and it closes lower, you've got a bearish engulfing. If you got a higher high and a lower low and it closes higher, you've got a bullish engulfing. So it can wobble back and forth between one and the other until the bell rings. And then finally you have one or the other. Unless, of course, it closes unchanged, which it's nothing. And that rarely happens. So at the moment, I have to say it's an outside up day, but I don't think that's going to stay that way. I think we're going to end up with a bearish engulfing, which, if we do, will tend to tell us that the market's going to make new lows, which is my belief at this point. Unless, of course, we get a strong rally and it closes higher, then I have to switch. But at the moment, I'm expecting the lower close and a move down to approximately 57.80 down to 57.26. 57.26 is my favorite. Next chart, 5-minute data, E-mini, stalling out just a little bit around the earlier high, and that was the middle of the night, actually last night. Went all the way down to make the lower low, and then outside down day. Came all the way back up to a little bit higher right now, just 8 points. And now an outside up day and a possible bullish. But let's wait and see. Because we were making a bearish engulfing starting at about 1:35 a.m. California time, the automatic trading system went short, made a day trade scalp, and got out of the trade about the time I was a little bit after I was up and starting to watch the market. So an automatic profit, but the other ER1 overnight trade did get stopped out with a little bit of a loss, and I think the combination of the two is a small loss. So I'm flat, and we do not re-enter trades. So if it has an outside down day, I'm not going to go short again. We don't do that. So that's that for ER1. Now ER3, if we do have a bearish engulfing, will kick in for tomorrow and the next couple of days. Speaking of that, next week, Thanksgiving week, I'll be here on Monday and do my YouTube. But Tuesday, Wednesday, Thursday, Friday, no YouTube. Most of next week. Just want to mention that. Next, we've got the spider outside trading range. Nothing going on really. And in fact, I don't know that we have an outside range. 89.54 today's high. Yesterday, 89.49. So yes, we did get higher than yesterday's high. And momentarily, it's a bullish engulfing, but it's not a signal because we weren't oversold within the last several days. So it means nothing except the bullish engulfing could cause a little bit of a rally. And after all, there's a gap to close at around 592.5. Then down. I think we're still going to go down, whether we have a little bit more of a bounce or not. Next chart is a spider 5-minute. Come up here, close the gap, 592 3/4, and then start to slip again. Maybe. Doesn't have to close the gap. Gaps are most of the time closed. Next chart is the NASDAQ QQQ. Big gap to close on the upside and a small gap on the downside, partially big gap on the downside. Already about 2/3, maybe more, closed. And that would be Friday's low. So there's still a little bit more to close. And I think that's going to happen. So we're kind of between a rock and a hard spot. Do we go up and close that gap first, or we go back down and finish closing that gap? Well, we'll see. One way or the other, more downside move, I don't think is going to start a bear move or a bear market. This is simply a short-term downside correction in the stock market indexes in an overall longer-term bull trend. Next, QQQ, we were short from a great sell signal a week or so ago. Got stopped out yesterday on the rally, took a couple of profitable trades out of the market, smiled, and we're happy. Market currently trading a little bit higher than where we got out. Didn't look like that this morning, but I'm okay. But this is okay. Anytime you see green, profitable trade, you should be happy, especially the bigger ones. So are we bottoming out or not? Still gaps to close either side. We'll see. Next, NASDAQ did make a new low for the whole move down here and does not have a bullish engulfing so far. But we're close to yesterday's high, and it might make it above yesterday's high. But you can see that we're nowhere near oversold, which in my case is 25, overbought 75, not Wells Wilder's 70 and 30. And I did learn RSI 1-to-1 directly with Wells, both of us speakers on the international lecture circuit, late 70s, 80s, 90s, and into the new millennium a little bit. Now, are we turning around and starting to go up is a big question. I don't think so. Not quite yet. We might have a little more rally, day or two, not too far, and then new lows, or to start coming down today. A little bit of resistance right here in the NASDAQ, yesterday's or early morning highs and yesterday's highs. So we'll see what happens. We did make, of course, a lower low on a little spike bottom for a minute or two, and then bounce back. So minor short-term support is holding, and I'm looking for a little bit lower. Now, the YM Dow made new lows by a whole big chunk, and it is nowhere near higher on the day, and the high is close, but that was last night. So it's weaker, quicker, faster, lower than the other indexes on the daily data. Of course, that means the minute chart sucks as well, 1 minute, 5 minutes, doesn't matter. So I'm looking for a big dip down, 42,034, 42,034, give or take a little. We'll see how close I get. And of course, on the YM, 1 minute, there's your big down move, a little bit of a downside breakout, big swing down a few minutes, slow retracement, another big swing down. And so far today, that's all she's got. And a rally back up to a little bit of resistance again, yesterday's low area and the day before last Friday. Okay, Russell finally, like I talked about days and days ago, has come down to the bottom of this big, broad resistance area. And just to show you again, this is a 2-year, I think it may be more than that. Yep, more. January 21, 22, 23, that means we're almost a 4-year resistance area that we have shot back up into again, failed to break out of it, which would be closing a little bit above 2,500. Now we're back to the bottom of it at 2280-ish. I think we can dribble back down into the red zone here, and that would be down to 2223 or even 2100, and then up. Not long-term bearish, trying to pick a real turning point to the upside for you that's going to last quite a while and be a good scalping opportunity. But this is a YouTube. It's not all day long. I really can't offer scalping ideas much because you've got to be very, very quick and watch all the time. Unless you've got a strategy like the ER signals strategy, which automatically day trades for you. Next, we got the Russell 5-minute. No other comments. Still looking for support to be broken and a little bit lower. Okay, we're going to go to bonds. Hooray! We've got a nice rally today. It's a new high for at least the previous 4 rally days. And it's holding relatively well, higher than the close and higher than the openings of the last approximate 5 days, 4.5. Like what I see. I think we have a little double bottom. First low was on 11.6 and the second one was yesterday, 11.18. That little double bottom is, I believe, the last shoulder on a giant 2-year head and shoulder bottom formation. Now I do not want any new lows. I simply want to go up and relatively steadily and relatively quickly, closing about 118, let's call it 119 or higher, would really cause me to be very convinced that this market has started a giant head and shoulder bottom formation, 2 years in size, which should cause it to go up all the way up, if it works correctly, to 150 and a half. Big, big move I'm forecasting. Take many months to do it. What about 10-year notes? Exactly the same story for the big 2-year pattern. Bullish objective at a minimum is 126 and a half. Now we have minor new highs for the last 3-4 days. Excuse me. And we don't have a double bottom, but we do have a lower low on Friday, which did not close below previous lows. They keep talking about that. No downside follow through. Damn near closed higher on the day, almost, for a minor, regular, not very trustworthy reversal, and almost had a bullish engulfing, but it didn't have that one either. So if we had been a little bit stronger on Friday, we'd have a buy signal at the bottom of the market, but again, it didn't really happen. So I can't claim that I bought, the system bought the bottom of the market, the bottom day of the market. Okay. We're out of previous ER1 scalp, of course. That was on the day that we had the signal, which was the top of the market on September 17th. And ER1 overnight with this particular kicker, which I may have changed once or twice on the way down and told you at the time. But here we are after the signal was created on September 17th. It's 2 months later, and we're still short, and it's trading at 109, and we are short at about 115 and a half. This is a whopper. Our stop at the moment is at 10.18, 110.18. So I know where I stand, and I'm going to have to see if I'm right about this turning around. Remember, my opinion is my human being, 53-year experience opinion. The strategy doesn't give a damn about my opinion, although I developed a strategy. It can't work exactly the way my opinion evolves. Because of the wide variety of human shortcomings, opinions are not the best way to be trading. Develop a trading system that's mathematical, that has a good historical track record of working, and use that, and maybe occasionally adjust it based on your experience. But it's got to be a good system to begin with, of course, in order to do good. Probably, not guaranteed. Past performance is not indicative of future results, and hypothetical returns to some inherent limitations. I've said that a trillion times. Next, crude. Minor new high for a few days, bullish engulfing yesterday, and a fairly sizable one. You realize yesterday's high and low encompassed 1 previous, 2 previous, 3 previous, 4 previous days. Lower low in 4 previous days, and a new high for the 4 previous days. A lower low for more than 4, but that's the one that counts. So I'm liking what I'm seeing. Minor new high, up a little bit at the moment. I think we're in the process of turning from a support area, which it bounced off of very handily on Monday's low. What about heating oil? Bullish engulfing yesterday, unfortunately not oversold, so we didn't get a buy signal in a general area of support. Now a new high for several days, and I think we're starting a rally here. I think we could go up and make new highs for a month or two on both the crude oil and the heating oil. What about natural gas? Well, we have a pattern that I'm going to detail. The low on October 21 is a shoulder low. The bottom of the market with a bullish engulfing ER buy signal to the exact low day November 14th, it's green, and that's why, because it was a bullish engulfing and oversold condition. So now we have not only an ER1 overnight, but an ER3 overnight that I'm showing you here, which bought almost the exact low of the day on 11.5. We did not get stopped out. This is our initial stop, stayed put for a few days and started to climb dramatically once it started to make new highs dramatically. Then we took a profit on Friday. We're out. I regret it at the moment because we're a lot higher, but I have a green trade, a profitable trade. Never cry over profitable trades. I'm telling you that now. And for a day and a half, it looked like it was the right idea. So I'm still bullish. Why? Shoulder low, October 21, head of the formation, November 4th, and Friday low, last shoulder low. I think I mentioned this on Friday. I don't remember, but it may not have escaped me as we have came down to this low, which was pretty close to that low. And I probably said something like, if it turns around and starts to rally, it's going to look like a head and shoulder bottom. And guess what? Not only did it rally yesterday, but it rallied a hell of a lot. And today we're breaking the neckline. We have a neckline break on a head and shoulder bottom. It's a relatively small pattern. It's only about 1 month in size, but that's not too small. And the upside objective could be, is 3.5. And that's going to make a new high for months. So it's going to perpetuate a longer term, bigger upside move, I think, for natural gas. Next, gold. Oversold turned the market late last week, Thursday. Didn't do much doji on Friday. Strong rally on Monday, yesterday, and some follow through today. So we're well out of oversold condition now, all the way back up to 45-ish. And I think we're going to rally more. Now, this is a longer term bull trend that is showing no long-term signs of topping out yet. I think we're going to rally all the way up to the highs, if not make new highs. Longer-term bullish, intermediate-term bullish, short-term friendly. Silver, pretty much the same story. Longer-term move, definitely trending higher. Support area, oversold condition, a couple of my favorite conditions. Oversold in a support area, or overbought in a resistance area is the same thing upside down for sell. So I'm looking for a rally back up to around 33 and maybe even new high ground. Platinum, again, oversold last week, Thursday, in a support area, and it just simply turned around. I didn't get any signals, unfortunately, but I did talk about the oversold condition and the support area. So support held. I think we can rally up to make a new high for a few months and very possibly make new highs for a much longer term, multi-month basis. Platinum is not trending really since 2022. A very big range, lots of potential going up and down in the range, but you're nowhere near higher highs for the last 2 years or lower lows. So you're between a very large rock and a hard spot, very wide. But I'm platinum friendly, bullish, looking for a move back up to probably 1060 and maybe even 1025. 1125. Next, high grade copper. Support oversold for one single day was that Wednesday? Thursday, last week. Nice turn, no signal. About to make minor new highs, but not yet. We are still short copper from the high day with a signal on September 30th. There's our green trade line. Here's our stop. Wow, it's turning out to be a whopper. We also had a fantastic trade back in the middle of August, all the way to the high day where we basically flipped to a short position, all in about 1 day, or maybe it was 2 or 3. Okay, soybeans. We had a bearish engulfing on Thursday of last week, which I wasn't expecting. So far, it's not turning out to be correct. In my opinion about the grain markets, showing some minor longer-term bottoming type of activity. Beans, not one of the better ones. Oil is one of the better. But here we go. Minor new high, about to get stopped out. I'll lose a little money. But for the moment, we are back down into a minor profitable trade based on my new short sell signal on Thursday of last week. And we're short right there on a rally on Friday. And we're now almost low and last with a small profit. Now, we did get stopped out of our short ER1 overnight with a little bit of a loss yesterday. Too bad. So ER1 scalp made very good money, selling short right there at about 1001 and got out, I believe, right about there at about 988. The small loss for a couple of days was not as big a loss as the profit for the scalp on Thursday. So ER1 combined, scalp and overnight, made a little money. ER3 is showing the overnight trade doing well at the moment. But boy, that got scary when it came up very, very close to the ER3 stop and did not hit it. And now we're significantly lower on the day. Why don't we lower our stop to lock in a profit? Well, we don't have enough profit to make it worthwhile, and I want to see if it makes new lows to the trend. Then I'll probably start lowering my stop. Soybean oil recently made new highs since April of this year. Longer term trend changing. We have a shoulder, fairly sloppy, but the time frame is June, head of the formation with the lowest low in mid-August. But I'm incorporating this into it also, but it doesn't have to be incorporated. You could go with that kind of a outline for the indicator for the shoulder. And the last shoulder low, then we have a neckline. No problem, looks good. Rallied up, tested the neckline, didn't close above the neckline, broke it a little bit. A pullback to support held, and boom, up to and through and closed above the neckline. We get an upside follow through, short term, very short term. Sell signal did provide a move down to test the neckline and a profitable trade. Lasted a couple of days. Then new highs in the move, and again, we've got a sell signal on the top, which was a more of a profitable trade, got out a couple of days ago. We're now flat. We tested the neckline a second time, and I think we're about to make a new high for the trend, up to 50 and even higher. And that's a longer term bottom formation, to say the least. The minimum objective on the soybean oil, by the way, if this head and shoulder bottom works out correctly, 53.66. Way up there. Last tick, 45 almost. Soybean meal. Support, oversold condition, one of my favorite situations. Setups. And I think we're going to look at this in the months to come as maybe a huge long-term broad double bottom, with the first low being way back in February, end of February, and the second low Friday last week. So I'm looking for the resistance areas above the market to be challenged. We back off a little bit. We go back up and make new highs. And when you do your typical zigzag on the way up, this could be the low for a long-term bull move. Too early to tell, in my opinion. No signal, unfortunately, so far. We still have a few more days, and we could get a signal. Quick, corn. Already challenging the highest highs since July. A few days ago, exactly, turned back down almost bottom of a support area. And now on Friday of last week, bottomed out, closed higher, up yesterday, and so far today we're down just slightly. I think we're about to break out of another head and shoulder bottom. It's my favorite pattern. Ladies and gentlemen, I used to draw my charts by hand back in the early 1970s, 71, 72, all the way up until about 1980 to 82, when computers and printers started to draw your charts for you and do a variety of other technical techniques and draw the charts without you having to do the math on probably an old Hewlett-Packard magnetic strip calculator. Anybody remember those? I do. Now, if I'm right, the neckline is going to be broken at about 436.25, and it goes up a tiny bit every day. If that's true, and it does it, we get an upside objective of 483.75. We'll see what happens. I'm voting for that to become true. Again, broad double bottom formation since August, oversold, now moving its way back up again for the third day off of the lows. And I'm looking at these two lows as not shoulders, but just simply a broader double bottom. I'm going to leave it like that. What is this? Wheat, right. I think the difference in prices are about 7 cents, if I remember correctly. I measured it this morning. Not very much difference. And it's, again, all the way from August to the middle of November. So that's quite a distance time-wise. And the prices are pretty close. So I am calling this a potential double bottom. If all of that is well and good, then I'm going to take the average of the two lows visually, and on the high day, drop a marker and go up to the highest high. That's the depth of the formation. Grab my little measuring stick and move it up. And from the high of the double bottom to the upside objective, you got 707. Next chart. We have a bullish engulfing at the bottom of the move and the cattle 2 days ago on Friday. We have a nice rally. At the moment, we're higher by 45. I like what I see. We're long ER3, and that rhymed. ER3 scalp yesterday made a little money. I see that our ER1 scalp lost a little money, and I'm not coming up with a trade for some reason on my ER1 overnight. But it probably is still long, like the ER3 overnight. Pretty much sure of that, and that's about it. Now, we have a new low for hogs, but we're in support, although we're not oversold, so I can't claim we're about to turn up. But support does help me look for those bullish engulfings, look for those signals that show me the market's trying to turn up, etc. We did get overbought, and we have slipped off now for a couple of weeks. So I like what I see. Now, one stock, SQ. I believe this company is the responsible for making the little credit card processing cubes. I've seen some of them that slip right into the audio jack on your cell phone. Swipe your card in it with a proper app, of course, and you just spent some money. I think my barber has one of those. So I'm looking for a move up on this, and quite a substantial one at that. When you look at the long-term picture, you have a large bottom that essentially started developing around May of 22. That's 2.5 years ago. 2.5 years, it has stayed below the prices we're looking at, 92 at the moment. If you stay here, close here, or even go higher, this is a gigantic, broad bottom formation that you might make a very sloppy, but maybe shoulder. Now I have to say the lowest low in here would be October of 22. Then, of course, October again of 23. And the lowest low was August of 24. A little earlier than one might expect if you were trying to peg the approximate timing for the shoulder and the head. So the pattern is there. It's not quite as symmetrical as they usually are, but the body parts are there. And we're breaking the neckline. We're breaking into new high ground. We're breaking the resistance level today. 91.68 current tick, pretty much high and last. Minimum upside objective, and I'm stressing the word minimum, 134. 130, yeah, 134 will do it. But frankly, it's such a big, wide bottom formation for a couple of years plus that I would not be surprised to see this come up to 190-ish and even higher than that. This is an idealistic long-term bullish breakout. E-mini, coming up a little bit more. 5-minute chart. Minor new highs for the session. We'll see how far this carries. You know I don't trust the rally at this point in the E-mini or the stock indexes in general. But I do think that somewhere in this month, and it could be today, I'm not sure yet, we're going to have a turn up because November and December are typically strong months. You guys have a great Tuesday and profitable trading to you.